This is Ben, and this is your Belmont Math and Science Center tutor tip. So today we're going to be looking at double declining balance as a method of depreciation. In a previous video, we looked at straight line depreciation. So in this video, we're going to go through another example problem of how double declining balance method works as a method of figuring out what our depreciation expense will be. So the first thing we'll look at is our formula. The first part of the formula is we have our annual depreciation rate. So what that simply is we have 100% divided by useful life, and then whatever that is, we multiply it by 2. That's why it's double declining balance. That's where that comes in. And then once we figured that out, we're going to find our depreciation expense by multiplying that annual depreciation rate, which we just found, by the book value. So, for example, it could be 30% is our annual depreciation rate, multiplying that by our book value, which could be $10,000, and our depreciation expense for that period would be $3,000. But to do a more in-depth problem, we can look at this example right here. So, Company X bought a piece of equipment for $12,000. Useful life is 5 years. And the salvage value is $1,000. What is the journal entry for year 3? So we'll end up doing this actually last, probably. So the first thing we want to do, though, is we're going to try to determine our annual depreciation rate. So we're going to type that down here. It's equal to, all right, what do we say? We said 100%. Divided by our useful life, which is 5 years. And then we are going to multiply that by 2. So that's how that's the formula. And then if we put this into Excel to calculate, we have 100% divided by 5 times 2. And that gives us 40%. So our annual depreciation rate is 40%. So that's what we're going to be multiplying our book value by every time in order to get our depreciation expense for each year. So we're going to use this chart right here, and this is going to help us as we navigate our depreciation expense for each year. So we're going to put $12,000 for our beginning book value because that's how much it said in the problem. Bought the piece of equipment for $12,000. Our depreciation expense, we're going to go up here and we're going to calculate it, is 12,000 times our 40%. So that gives us 4,800, and then we'll just slide that in right here. Our accumulated depreciation, since it's only in the first year, is simply 4,800, and our book value at the end of the year is 12,000 minus 4,800. And that gives us 7,200. And that will be our beginning book value for year number 2. So we're going to follow the same process here. Year 2, we're going to look at year 2's beginning book value, which is 7,200. Multiply that by 40%. That gets us 2,880. We'll bring that down here. Our accumulated depreciation will be 2,880 plus our 4,800. And then we will subtract out our depreciation expense from our beginning book value again to get our book value for the end of the year. And that end of the year 2 will become our beginning of year 3. So again, we're going to follow the same process each time, just with different numbers. We're going to use that 40% every time though, and that gives us a depreciation expense of 1,728 for year number 3. And again, we're going to just add all these 3 up to get our total accumulated depreciation through 3 years. We're going to subtract out our depreciation expense to get 2,592 at the end of year 3, which will also be our beginning of year 4. Alright, so year 4, same process. 2,592 times 40% gets us 1,037. Again, we're going to just add up all our depreciation expenses that we've accrued throughout the 4 years. And that will give us, after we do 2,592 minus our depreciation expense, that'll give us to 1,555. Alright, so this is where double declining balance has a little bit of a different trick than any other depreciation method. So we have $1,555, and our first instinct would be just to do what we've been doing. Do 1,555 times 40%, and that's our depreciation expense. But we have a salvage value here, and that is $1,000. And with double declining balance, we want our book value at the end, and in any method really, we want our end book value to be equal to our salvage value. And so the way we do that is we just go ahead and we put 1,000 here, and we kind of work backwards, all right? So we have, since we know we want our book value at the end of the year to be 1,000, but our beginning of the year book value is 1,555, all we do is we just do 1,555 minus 1,000, and that gets us our depreciation expense for year 5. We don't use the formula that we've been using. We instead just fill in the blanks so that we can get to our salvage value of 1,000. And then again, if we're going to add all to get our accumulated depreciation for all 5 years, we just are going to add up each of these years as so, which gives us $11,000, which again makes sense. We had $12,000 at the beginning, and now we've accumulated $11,000 of depreciation, leaving us with $1,000 of salvage value, which is what our salvage value was on the problem. So we've been able to determine our depreciation expense for each year. Unlike straight line depreciation, with double declining method, we're going to have a different depreciation expense for each year, as you can see here. So when we're doing our journal entry, it'll be the same two titles, account titles, as we used in our straight line, and it'll be the same for any other method. We'll have depreciation expense, and then we'll have accumulated depreciation. But the numbers are obviously dependent on what we have here. So we are asking for year 3. So our year 3 depreciation expense was 1,728. 1,728 for both account titles. Again, there's no these need to balance. Debit and credit needs to balance. Debit to depreciation expense and credit to accumulated depreciation. So as you can see, the double declining balance method is a little bit more complicated than the straight line depreciation method. But if you remember these two formulas here and you just duplicate that all the way until your final year, you're going to be great. And then that final year, you're just going to use your salvage value to guide you home. If you have any questions, I suggest emailing your professor or coming in and asking us for some help at the Math and Science Center, where we are more than happy to help. I hope this helps. Thanks, guys.